Hello everyone, I'm Mary and I have been engaged in trading for a considerable period and I'm eager to share my knowledge with the others. That's why I established my YouTube channel. If you wish to join me in trading sessions and receive signals, make sure to subscribe to my Telegram channel. You can find the link in the description. Today I will be executing a series of profitable trades. If you find it appealing, feel free to join my YouTube and Telegram channels where I share precise entry signals. Today we have an extended trading session ahead during which I intend to maximize opportunities presented by the market. We will begin by analyzing all available charts and identifying potential trade entry points. In my shorter videos, I immediately enter trades, but here I will demonstrate the entire process. I'll start by reviewing all currency pairs and identifying interesting situations. For instance, on the USD and Canadian dollar currency pair, I notice an intriguing pattern. The price seems to be moving within a descending channel. Prior to this channel, the exchange rate exhibited significant growth followed by a decline and then a strong rally, leading us to the current channel formation. In summary, the chart is currently forming a flag pattern which experienced traders often refer to as a bear trap. We should avoid selling during this flag pattern. During the flag pattern, market makers manipulate the highs by progressively lowering each subsequent peak compared to the previous one. This tactic creates a false impression of market weakness, tricking many participants into expecting a shift from a bullish to a bearish trend in the near future, prompting them to open short positions. However, the price will soon approach the seemingly obvious resistance level. Traders may assume it's time to sell, but the price will unexpectedly break through the resistance upwards. This breakout won't be a fake one, as is often the case with other levels. Following this, the market maker will aggressively drive back the asset's price. Given that the price has been near the upper boundary of the descending channel for over a minute without breaking it, I'm considering opening a short position. The gradual downward reaction of the price, as seen in the candlestick pattern, supports this decision. Considering the previous interactions with the upper boundary of this bear trap channel, where the price fell away from the resistance level, I anticipate a similar outcome this time. The trap will likely close once again. Moving on to the EUR and Japanese yen currency pair. The price is currently trading close to a resistance zone and it remains uncertain whether it will break through or not. To gain a better understanding, let's examine the situation on a 15-second time frame to observe the price behavior around the resistance level. The price is approaching the resistance level and has been trading within its zone for some time. We will keep a close eye on the situation while I switch to analyzing the bear trap itself. Regarding the US dollar and Canadian dollar pair, it's evident that the price has once again neared the upper boundary of our descending channel, yet the trap has not yet been triggered, which is a source of contentment for me. The upper boundary of the price hasn't been breached as for now. Should the market maker alter their strategy about setting the trap, and if the price does a surge with strong candle movements, we may witness the emergence of a double top pattern on the chart. The situation would work in my favor by bolstering my confidence in the correctness of my decision. I anticipate that such a trade would conclude with a profit. Currently, I must wait for another 3 minutes for the 5-minute trade to reach its conclusion. Less than half of the expiration time has elapsed, providing a substantial likelihood of the price descending, and I'm currently confident that my decision was the right one. This trade is anticipated to result in a profit. If the market maker hasn't yet breached the channel upwards, then perhaps I was too quick in labeling it a bear trap. I believe the price won't breach it any longer. Observing the minute-by-minute candle movements, a distinct and visually appealing double top pattern has taken the shape. While it's hard to miss, I'll still make a notation on the chart for enhanced clarity. Here's the initial peak followed by the second peak, and at this moment the price has commenced a downward trajectory. This movement is anticipated to complete the second peak and finalize the pattern. On the whole, if this sequence of events unfolds, it will only contribute to my confidence. A double top pattern in this context implies that the price will persist in its course within the descending channel. At present, there is slightly over 2 minutes remaining until the trade concludes. Let's exercise patience and await the outcome. Within a few seconds, the trade will conclude, resulting in a significant profit of 50 pips. The trade has now closed as I expected, and it yielded a $71 profit, which is quite satisfactory. As you can observe, the price failed to break the channel and instead formed a regular double top pattern. As anticipated, the price started declining afterward, and it is likely to continue falling towards the lower boundary of the channel. For now, I'm done with the US dollar and Canadian dollar pair and will shift my focus to analyzing other currency pairs with potentially interesting opportunities, particularly those involving the market maker sections. Let's examine a different currency pair such as euro against British pound. The chart looks somewhat peculiar and is often challenging to discern without a lower time frame, which is conveniently provided by pocket option at 15 seconds. On this shorter time frame, it becomes evident what's happening. The price has reached a resistance level. Based on the candlestick patterns, I expect this resistance level to hold and the price won't break above it. Hence, I'm confidently opening a 5-minute trade anticipating a downward movement. Now let me switch to a larger chart to explain why I entered a short position here. The reasoning is straightforward. The price recently approached its historical resistance level, and in the past, it has consistently received a reaction from this zone. Consequently, I anticipate a similar response this time, with the price declining after reaching this resistance level. In summary, I need to wait for about a minute, and then the price will likely start its downward movement. While waiting, let's take a look at the euro and US dollar pair. A powerful last candle has broken the moving average, but the overall trend is still positive, with the price being in an upward trajectory for quite some time. Other traders have probably also noticed this trend. Before the recent bullish movement, there was a marked downward movement on the chart characterized by solid red candles. There's a high likelihood that a flag pattern will form, which could lead to a breakout and a shift in the trend from bullish to bearish. Eventually, the price may start holding in a downward direction, and it could potentially reach the significant support zone around the level of 1.095. At the moment, no significant developments have occurred. Let's explore other currency pairs. The British pound to Japanese yen doesn't seem to be showing any noteworthy movement so far. Now let's shift our attention to the next currency pair, the US dollar to Japanese yen, but unfortunately it appears to be experiencing a lackluster phase. The price on this chart is currently stuck in a mundane sideways movement. I'll make a notation of this range on the chart just in case the price breaks out. As for the British pound and USD pair, there doesn't seem to be anything particularly interesting unfolding in the moment. Oh, the euro and Japanese yen. It feels like I've already analyzed this chart a few minutes ago. The price here has approached the zone of a previous high, to which it has strongly reacted in the past. This is a crucial moment. The price is currently within a zone of very strong resistance, however, and it's not advisable to sell at this point and rely on luck. Instead, patience is required. For now, I will add this pair to my favorites and keep monitoring it closely. If there is any significant reaction or a breakout, I'll be ready to open a trade in the appropriate direction promptly. In general, here's my train of thought. If the price doesn't break this resistance level before my previous, possibly not the best trade on the euro and British pound pair closes, then I'll probably enter a trade based on the situation with the euro and Japanese yen pair. The crucial thing is not to miss any potential opportunities. So this is the euro and Japanese yen pair. I've taken note on it, added it to my favorites, and for now, I need to wait until my trade on the euro and British pound pair concludes. There's approximately a minute and a half remaining. Let's be patient and see how it unfolds. The trade is about to close within a few seconds. Finally, the trade has closed. I must admit I was feeling quite nervous. Fortunately, this trade ended in profit. The price couldn't break the resistance level, but it came dangerously close to doing so. The sideways movement during the last minute was nerve-wracking. Nevertheless, I made a satisfying $81 profit, which makes me happy. Now let's shift our focus to another currency pair. I haven't forgotten about the euro and Japanese yen pair. The situation with it is developing. While it's all intriguing, there is nothing specific yet. In such cases, the best course of action is to exercise patience and observe the price movements, waiting for a potential opportunity to emerge. If the current resistance level holds, meaning the price doesn't break it with significant momentum, I will enter a trade here for a downward movement. I can see that the price is gradually starting to turn, which could indicate the beginning of the anticipated downward movement. Alright, enough waiting, I'm opening a position. I'm investing $100 in a 5-minute trade, expecting it to move downward. Typically, as soon as I open a position, the price goes in the opposite direction. But you know what? The SAR indicator with those little dots near the candles has already given a signal of a trend reversal. A dot appeared above the last candle, which is a positive sign confirming the likelihood of a downward price movement starting now. At the very least, I anticipated the price will fall to the 0.5 Fibonacci level, assuming there are no false breakouts. Ideally, the price should reach the golden zone, as traders refer to it, which is the 0.618 level, just below half of the entire impulse. Moreover, the SAR indicator shows a second dot from the top, providing further confirmation of the trend change. While SAR cannot predict the future, it suggests that the price is hesitant to move upward. With the price showing reluctance to move upward, I'm confident that my trade should close successfully with a profit. Now the best decision is to wait for the next 4 minutes until it closes, and then look for new exciting opportunities. The trade is about to close within a few seconds. Despite the false breakout, I am relieved to see that the third trade has closed in profit. This additional trade has earned me a $70 profit, which is quite satisfying. I want to express my heartfelt gratitude for your time and interest in watching the video. If you found it enjoyable, I would be extremely grateful if you could show your support by giving it a thumbs up. I also encourage you to subscribe to my YouTube channel and join my Telegram channel so that you can stay updated on my upcoming content. By being a part of our community, we can foster a sense of camaraderie and have more insightful discussions. Thank you for your support. Farewell.